Good morning, and thanks so much for tuning in to Stocks to Watch on BloombergQuint. I'm Mathew. We're looking at three ideas as usual on this program, and we're going to start with IRCTC, which is feeling the brunt of the pandemic business wise. CDSL has been very active in trade recently and is now trading close to its 52-week high. And finally, we're also going to talk about the logistics sector, but with a particular focus on cold chain storage. My guest today is Dharmesh Kant. Thanks so much for joining me, Dharmesh. Good morning to you. I want to start with IRCTC. And while there is a lot of happiness and there's a lot of positivity around the announcements of the two vaccines that happened not too long back, the situation on the ground, particularly for certain sectors, is quite bad. And IRCTC, the latest update, of course, is that the company has cancelled running of two Tejas Express trains because the Tejas Express trains had low occupancy levels on account of the COVID-19 pandemic. And that's to be expected, right, Dharmesh, because people are not going to be traveling very soon because there's going to be a fear and there's going to be a bit of caution involved in public transport. So, how do you rate the company? It's actually made a V-shaped recovery, and it is still about 50% higher for the year-to-date period. So, it's not exactly cheap. How do you rate it right now?
Yeah, good morning, Alex. See, as far as IRCTC is concerned, one should be looking at it from an investment perspective for 3 to 5 years to begin with. It should not be looked at as a trading bet. Though in the current scenario, the things have not been working fine, and this is a good opportunity, keep on accumulating IRCTC at every dip. It's a monopoly business, very low capital is employed, high return on equity around 60, 65 kind of a return on capital employed is there. At the same time, very high margin kind of a business, very good cash flow. And when you have a monopoly business on the largest transportation carrier of the nation, there's hardly anything can go wrong. And this, which we saw in the pandemic, was the thing going wrong for IRCTC. And naturally so, because whatever travel is there, it has to be a necessary travel. There are no, family functions being there or marriages, or even, normal people traveling for, tourism or meeting their relatives is not happening as of now. So this is just a passing phenomenon. I mean, 6 months to 9 months time or a year time from here on may still be difficult for this company to operate it is 100% capacity. But let's not forget, even a little tweaking in the margin they collect on the ticket sales or the food and beverages which have been served on railways are all routed through IRCTC. So in my view, it's a good multi-bagger if you're holding it from at least 3 to 5 years kind of a perspective, and still a lot of value unlocking and monetization of activities can take place with bullet train and everything coming into play. It will be a good competition to airways as well. So I do think any dip from here it should be bought into. Likely target from by end of FY22 should be 2000 plus.
Understood. So that's the view on IRCTC. The other one is not really news-based development. I'm talking about CDSL, Dharmesh. And you've seen all this commentary about increasing retail presence in trading activity, and I recently read a brokerage report that talked about higher number of deliveries, which is why transactions and also a surge in transactions because of increased retail participation. But CDSL seems to be on a one-way path upwards. It's near a 52-week high. I'm trying to understand why that is. Is it because of this, or is the business really reflecting that a change in dynamic? And would you buy at this point?
Yeah, definitely. Yes, Alex. Again, from a long-term perspective, because CDSL, the type of business it is into, it cannot be taken as a trading bet. I mean, 5 months, 6 month perspective is not warranted here. At least it should be for 7 years kind of a time frame. And as far as the business dynamics is concerned, it was reflected in the September quarter numbers, which they reported it was significantly higher. And there are two type of revenues primarily. There, one is the annual subscription charge, which they charge for holding a demat account, and the other is a transaction based. So if you look at it, I mean, by March 2020, one of the reports which I was going through, it was there around 4 crores of demat account as there is in India, and 50% is with CDSL and balance is with NSDL. And out of that, 25% is only active transaction based. balance are lying non-active. So that activity ratio may have increased in this era, and more people are now finding another way of generating income. And these are all educated, good people out there. They are not like just hearsay kind of a people. So this financial literacy was to happen in India, and the way it is happening is emerging for the stock market. Lot of money, the return can be, higher returns can be generated on their own savings, which people are holding. And there are two kinds of growth which you can see. One is the inorganic growth, and the other is the organic growth. Inorganic growth, I mean, if you take 30 crores as the working population of India, and even if 30% participates, so it will be 9-10 crore kind of a demat account should be there. And this 25% activity ratio goes to 60-70%. You have again a multiplier effect. So from a 10-year perspective, CDSL business going tenfold is very likely on the cards. And this is what I see going forward happening in India, as it has been the case with most of the developed countries. So the dynamics have changed. I mean, equities as a class is now a very preferred class among most of the people out there. They have realized this value. So CDSL should be kept into one's portfolio from a long-term perspective. It's an absolute buy from my end. I would be surprised if it becomes a multi-bagger and maybe next 5 to 7 years time frame.
Understood. Let's look at the last idea, and I want to focus more on Snowman Logistics because really that is the cold storage play that you are talking about, and the reason we're talking about it is that both the vaccines that were announced by Pfizer and then later by Moderna, they make use of messenger RNA technology, which essentially requires the vaccines to be stored at very low temperatures. And now, of course, we've heard that Moderna does not require as low temperatures as Pfizer, but Pfizer requires minus 70 degrees Celsius. So, which is why I would think that Snowman Logistics has been in focus. At the same time, it's been languishing, Dharmesh, for quite a while. It's not been active for quite a while, but it suddenly picked up on this news. Would you say that caution is advised at this point?
Definitely, yes, Alex. This is just a trade. I mean, vaccine won't be required for 10 years, right? It will be a one-time activity. And let's not forget, this mass vaccination will be done by Government of India. So they will have their own rates and own, cost-bearing capability, and they can, determine that. But nobody can say no to them when they come out to say this is the price we are willing to pay for the storage capacity, and you have to do it. There is no other choice at all. So it's administered kind of revenue which you will get. As far as logistic business is concerned, I was never ever keen on this because the type of capital which you have to employ on your fixed asset is humongous. At the same time, you already know what is the tonnage you can generate. I mean, the business expansion capacity has to be always inorganic, and again, same kind of capital is to be required. Looking at Snowman Logistic, if you look at last 10-year, 5-year, 3-year numbers, they are pathetic. Hardly any return on equity. In fact, it's a minus return on equity kind of a business. So it's not even covering your fixed deposit savings rate. So even that is not there in Snowman Logistic. At the same time, if you look at the revenue generated on the fixed asset, it is only 40%. So with this kind of business model you have entered, it's very surprising to see the sustainability of stock price CAGR on the top line. Maybe this trading flips can be there,
Right.
but Snowman or other logistic business is not a buy to my mind.
Fair enough. And that wraps up today's conversation. Thanks, Dharmesh, so much for taking the time this morning. Wish you all the best in
Thank you
trade
so
and,
much.
of course, for the rest of the week. And to you, dear listener, dear viewer, thank you so much for tuning into this conversation. I hope this helped you out. There's a lot more coming up in just a short while on Bloomberg.